Hello, Romesh.
Hey, Mike.
Good afternoon. Right, let's get started. So, welcome everybody to Strive and Thrive. This is a series of LinkedIn live episodes, which, with the aim of enabling and empowering entrepreneurs in building businesses that want to achieve success in areas of people, planet, and profit. Over the next few series, you can join myself and Romesh as we discuss the mindsets, skills, and knowledge entrepreneurs need to strive and thrive in an ever-changing world. So let me quickly, before we move on to today's topic around the finance as a key to success, let me introduce myself, and Romesh can do the pleasure for himself too. So my name's Mike Oliver, and I'm the founder of Easel. I set up Easel around 4 years ago now. My purpose at the time was to place and be able to help shape, create, exploit new capabilities, both for commercial and social good. Since setting up Easel, we've worked across multiple government sectors, UN organizations, and in industries, supporting the launch and adoption of novel products and services. It's been a fascinating journey. Over the course of that period, we've secured circa 2 million investments for startups with collaborative partnerships. And I'm really looking forward to using these sessions and discussions, sharing with you my learning and learning from you. So it'd be really good. So let me pass over to Romesh for his introduction.
Thanks, Mike. Hi, everyone. Let me tell you a little bit about myself and my experience. I'm a qualified chartered accountant. I qualified with a top 4 accounting firm in the London office many years ago. I then spent 6 years at a FTSE 100 business in various finance roles. But back in 2008, I pivoted my career to the world of startups, scale-ups, and SMEs. Since then, I've been Chief Financial Officer or Finance Director of a number of successful growing businesses. I'm really passionate about helping businesses thrive and grow. And so in 2020, I set up the FD Consultant, which is a collective of part-time or fractional finance director consultants who support businesses in the startup, scale-up and SME space. I'm super excited to be on board with Strive and Thrive. I'm looking forward to contributing to the discussions, but more importantly, learning from Mike and other guests in future episodes.
Thanks, Romesh. Really good. So before we get started again on the subject, what I want to do is ask you a quick question. What is the most interesting learning in your business you've done in the last month? And I'll give you a moment to think about it. Before you do that, I'll give you the one I thought about when I was writing the question. For me, in the last month, one of the most powerful things is building trust in your teams. And for us, we had a big customer presentation this month. We decided only 3 people could attend. And you know what? I wasn't the best person to do it. So I didn't attend. And the team smashed it. And it reinforced for me what I believe in, that actually it's all about the people, the team. And for me, although we're doing finance, this will be a topic we'll explore over the next 6 months as part of this work. So what about you, Romesh?
That's a good one. That's a valuable lesson or reinforcement there, Mike. For me, I think it's the power of kind of going back to your network. Always trying to expand my network, meet good people, but also, it's important to stay in touch with the people that you have met previously or have known for a long time. I've had some really interesting conversations in the past month, I think, by deliberately doing that. And so some exciting opportunities ahead as a result. I'm focusing on that.
Thanks, brilliant. So let's move on to this month's topic, finance and a key to success. So we all know that finance is a very polarising topic amongst entrepreneurs. I've spoken to a lot of people about it. Some people place it front and centre of their business, counting every penny, converting all that into currency. Others would prefer to kind of avoid it and deem it as a bit of a headache. I've worked with businesses that are good payers, late payers, those that struggle to pay at the end of the month, and have those discussions around, can we meet payroll? It's all part of that experience of being an entrepreneur and growing your business. Ups and downs. But actually, ultimately, when you start to see that profit and build the capital to invest, that's when it really gets exciting. That's why we've seen this topic as so important and why we've picked it for our first discussion. So in this episode of Strive and Thrive, Romesh is going to talk about his personal experience running his own finance business.
Brilliant. Thanks, Mike. Yeah, so obviously the topic of today's discussion is finance, a key to success. What I'm going to talk about is the power of turning finance as a function in your business from a business headache into a truly crucial driver of growth. What I've found, particularly in the startup scale-up SME space, is that founders, entrepreneurs, business owners often spend too much time bogged down in admin and the complexity of managing their business finances, process, and risk. So ultimately, they can think about finance in a negative way. It's an area they don't really understand. They don't like spending time on it as a result. And it's an area which is costly in terms of their time as well. So ultimately, the perception of finance is that it's a drag and it's a distraction from the main business objectives. I believe that when run efficiently and effectively, a finance function can be transformed into a value-added key contributor to the business and really will drive and propel a business forwards.
Really, really good. I agree with that. What do you identify as the main aspects of when you talk about value add?
Yeah, so I guess firstly, there's the kind of defensive aspect and risk management aspect where by having a well-functioning finance team, founders, CEOs, business owners can focus on their own key areas of value and expertise, and they don't need to worry about cash flows, transactions, finance risks, etc., because they know they're being handled, they're being managed well and effectively. And I think that kind of freeing up of headspace is really powerful. The second main aspect, and this is really important, is proactivity. I do believe that all business activity ultimately flows through the finance team. So a value-added finance and accounts function will basically ultimately discover, provide excellent data. Where it should be helping a business is taking that data and presenting it to management in a way that enables management and leadership to make better decisions quicker. And I think another aspect, there are many aspects of value add, but another example that comes to mind is where a senior finance person can help turn a strategy into a kind of realistic, measurable plan.
Really good. Thanks very much. So I like the way you've kind of touched on the two main themes of sort of risk and growth, and I think that's really interesting and some of the scope you've looked at. Why is it though that you think people shy away from finance discussions? It's difficult finance planning questions. What have you experienced?
Yeah, I think it's probably psychological. It's perception. It's not understanding the power of what finance can do for your business. As I touched upon in the first section, I think there is this negative kind of thinking about finance, that it's a cost, it's a distraction, it's something that has to be done. It's not something that's embraced. I think business leaders don't necessarily they don't find it simple and easy to understand. They're commercial people. They want to drive the business forwards, but they need to have the information presented to them in a way that enables them to do that. I think that finance can be presented in a technical way, which is full of acronyms, which aren't particularly helpful, and accounting, kind of speak, if you like. Whereas if you can present things simply, transparently, commercially, then you can show the power of the data and the information that can, as I said, ultimately help business owners make better decisions. So they might see finance as simply a compliance cost, things like statutory accounts, tax returns, that kind of stuff. Their focus of the business team might be on, for example, growing sales, Mike, but they're not really understanding the importance of cash flow and profitability, and that's particularly in the early stages of a business. So I think it is communication, it's perception, and making finance accessible, commercial, and relevant.
Do you think it's got a perception problem? And if so, how do you think you could flip the perception problem? What would it look like?
I think you flip it in reality by doing.
Okay.
Right.
Good.
So I'm a real believer in demonstrating. You can give people all the messaging that you want, but until they see it in action, that's the most effective way, in my experience. I think if you can enable finance to be a driver of the business rather than a drag, you ultimately significantly improve the chances of business success. And what do you think from your perspective, Mike, as a non-finance person?
In my experience, I think it's working with people outside the finance function to be more confident in understanding how they can engage and use finance to support them. And I think working more collaboratively and recognizing the power of being able to understand the numbers and the implications and the KPIs on your business help drive better strategic growth or recruitment decisions. And I do think that's hard for many people to truly understand. And I do think finance ends up becoming a silo function. What's your view? Do you see that?
Yeah, I do. Yeah, and that's interesting, right? And when, in my opinion, when finance is that kind of silo function, and silo function, I suppose, is quite a grand term, but it could be that there's just a bookkeeper or an external accountant or a few people in accounts just kind of sitting in a corner doing complicated things, in inverted commas, that no one really understands, but kind of gets the numbers done and gets the tax returns and annual accounts sorted and manages transactions. But I think the way forwards is to transform that perception of finance and to understand that it is truly at the center of the business. All activity does flow through finance. And so I think that an effective finance function works closely with all business departments in order to increase efficiency and effectiveness. And this is especially true of SME businesses, right? Where the teams are relatively small. They're not big global corporations. So a siloed accounts function might perform certain tasks well. And, as I said, kind of statutory accounts, kind of looking at transactions and ticking certain boxes. But I think to truly add value, to drive a business forward, it's important that the finance team understands the business and becomes more commercial.
Good. Right, I'm going to touch on a personal story here. I was working with a mentor in Canada, and he was talking to me about working with entrepreneurs, and he said, "There's one book, Mike, you have to read for a person who's non-finance." And I said, and so he suggested reading the book, Simple Numbers, Straight Talk, Big Profits, by a book by Greg Crabtree. So I worked my way through a finance book, and actually it really helped me a lot. Helped me work out the things I needed to know and the team needed to know. Do you have a view on what numbers in finance that you think founders, leaders, directors should know, and what are they?
Yeah, so ultimately, there's so much data and information that finance can provide, from headline figures to ratios, investment metrics, key performance indicators or KPIs. But for smaller growing businesses, I suppose I'm going to talk about two numbers which are the most important. The first one is cash, is the cash you have in the bank right now, and the cash flows that you expect in and out of the business over the coming months. And the reason I've highlighted that first is because the main reason that businesses in the SME space fail is that they run out of cash. So it's absolutely critical. You need to control your cash flows to ensure that your business can survive, and that's the first thing. Again, another obvious one, profits, right? Understand the long-term viability of the business. And it's really important for business leadership to understand the difference between cash and profits. And the main difference is timings. So, an example to kind of, I suppose, give you is, even if you've got a profitable business importing goods, you might have cash flow issues. And I've seen this in my career, because on paper, you sell the goods, you sell them at a profit, and everything looks good on a kind of monthly basis. But actually, in reality, if you're importing those goods from abroad, you often will have to pay for those goods up front. So that's a big cash outflow. There could be a long lead time for delivery. You're going to have to store those goods potentially, and there are costs associated with that. Delivering those goods to the customer. And that's all before the customer is actually paid. So in that example, there's just lots of kind of cash outflows before cash comes in. And so it does depend on your business model, the kind of business you have. But I would suggest for growing businesses that cash needs to be managed well, and you need to understand as far as possible how cash flow impacts your business.
Yeah, I take your point that the detail is in the type of business that you run. I think cash flow, profit. I recently have orientated one company around gross profit per employee. That's just such a nice KPI that it really helped them build a much more robust business case and help them really think about what they are as a business and how they should run themselves. And so I think there are examples where specific companies need to be really specific in what their KPIs are for them from a financial perspective.
Okay, that's really interesting. So, I mean, absolutely, gross profit per employee. So is that a consultancy by any chance? A consultancy
yeah. Yes, good guess. Yeah. Magic consultancy number.
Yeah, and I think ultimately, financial information should be tailored to each business and each sector as appropriate.
Good. Right, let's move forward. What I want to segue in is the bit that you talked about earlier in the conversation around growth. For me, it's one that everyone looks for, and I'm really interested in your view on how finance can play a key role in leading into growth.
Yeah. So we've often restructured and refined financial reporting of a business. At the FT Consultant, we work with multiple clients in various sectors, and that's one of the key things we do. Now, in doing this, we can identify, and we have identified, business activities that, for example, might have low profitability or high administrative costs or a high operational burden in terms of time spent by employees. Where we find those scenarios, we'll highlight them. We'll encourage management teams to reduce activity in those areas and focus resources and more effort on kind of high return, high efficiency activities. And I think that can significantly grow the bottom line of a business. So I think a really important concept for business leaders in SME businesses to think about is avoid being busy fools. Focus on the profitable areas of the business. You've got to make money ultimately to survive and then thrive. There you go. Do you like what I've done there?
Nice drop. Can you give can you give me an example where you've applied this and where it's led to a positive outcome?
Yeah. Worked with a business recently that has multiple service offerings to customers, where one kind of one income stream was, I suppose, utilizing 25% of operational spend, but only producing 2% of operational profit. So you can see there a lot of cost for very little kind of value. And these are the kind of golden nuggets, ideas, to help refine and fine tune kind of business strategy and to help business owners identify where they can be more effective.
Okay, pull it on the strategy word. Can you help inform where finance can support strategy for a business?
Yeah, I mean, having a clear strategy going forwards is really, really important. It's a cliche, isn't it? But unless you have goals, how do you achieve them? And a strategy helps you kind of in a structured way achieve those goals. It's 100% an area, I think, where finance can tangibly add value. Forecasting and modeling a strategy and its key assumptions can, I think, highlight weaknesses or issues with the strategy, which can prompt adjustments, which can make the strategy ultimately more effective and likely to succeed. I think the process involves understanding and questioning the strategy and its assumptions before converting, the ideas in the head or heads of the management team into financials. So by turning a strategy into black and white numbers, you can see gaps in the strategy. And using a forecast model can provide that clarity that then gives that roadmap to execute and measure against.
Nice. Can you give me an example? Can you give us the?
Yes. So one that I've seen is, when you're modeling a business plan for growth. Did that recently with a client, and they wanted a plan for growth by investing in staff. Our modeling kind of took their assumptions on board, but it showed that the pace of recruitment based on their sales growth assumptions, which were linked to their recruitment, was too fast. So by employing kind of new staff too quickly, there was a significant risk that they would run out of cash. So we kind of saw that, and we were able to adjust accordingly that pace of recruitment, and also kind of focusing on the assumptions of sales growth and how bringing on more staff was going to link directly to that outcome.
Yeah, good. You're going to be proud of me here, Romesh, building off what you've just said. I was a statistician in my past, and I was helping a company a couple of years ago now, and I built them a steady state model for their finance structure to give them a strategy for growth. and really help them understand their core underlying costs, revenues, margins, all the kind of key numbers you've talked about today. And we use that to inform their investment plan. And actually, it's doing really well. And each year I go in and do a little steady state model for them. And I think those little tools and techniques are invaluable to founders and entrepreneurs, and people like yourself. And those are the skills.
I couldn't agree more. I mean, the more information and clarity and transparency that you have in your business, surely it's just obvious that the better informed you are, the better decisions you'll make, and that's ultimately going to lead to a higher chance of success, right? So yeah,
really good.
I think that's great practice.
Let's move on to some questions from the audience. So if anyone's got any questions, please put them in the comments, and we'll ask. I will ask Romesh them in advance. So I asked a few people to give me some questions for you. So these are when they knew the subject. So these are the ones that were given to me. So good luck.
Okay.
I love the first one. This is the one that came up first. So what do you think is the most important, money or purpose in a business?
Ooh. Okay, yeah, that is a good one. Well, look, I think it's clear that business has to be profitable and cash flow positive over the long run in order to be viable, right? So in that sense, money, given that's the word that was used, money and finance are critical business considerations because you have to survive first. However, I think you should also consider the triple bottom line. The people, planet, profit concept, and note that money is only one aspect of that. The triple bottom line, by the way, for those of you who've not heard of it, is an accounting framework that it differs from traditional finance or accounting frameworks because it includes social and environmental measures. So I think it's really important to consider all three aspects when you are growing your business and when you're planning your strategy, because what I feel that business owners miss sometimes is the opportunity to bring in the pillars of people and planet, because if this is done effectively, in my opinion, it will have a really positive impact on profit. So for example, you can link a sale to a sustainable action. We've done this with clients, with our own businesses, where you link a sale to, well, if you buy this, we will plant some trees, or we will protect some rainforest, or we will do something meaningful which has a positive environmental impact. And I think therefore, you can increase the power of business effectiveness and success by bringing in other aspects. But yeah, to summarize, and sorry, I'm waffling here, but it's a really interesting question. I think you need finance to survive, but actually the other pillars, people and planet, can boost finance and profitability.
Yeah, as you were talking, I almost think it's a topic unto itself that can be unpicked another day, because I think there's so many angles to that question. I think I'll jump onto another one, which is also really pertinent in the market right now, and is a question that lots of people think about when they're setting up a new business: is do you bootstrap, i.e. make money and grow money and build your own capital, or do you go for funding? And we know at the moment the market's very tricky for funding. Lots of companies are resorting to bootstrapping. What's your view on this question, and what should founders consider when they're thinking about bootstrapping versus going for funding?
For me, I think it's horses for courses, right? So it depends on the situation, what the founder, CEO, business owner is trying to achieve. So if we look at funding first, firstly consider why. Do you have a clear idea of what those funds will be used for? Are they Are they absolutely necessary? And if so, then fundraising could well be the right option. It's a very popular route for many reasons. It's a very well established route, the kind of fundraising through investment or debt, the pre-seed, Series A, B, C, etc. And we do support it. However, there are downsides to raising funds versus bootstrapping, and it can be high risk. Many businesses choose that path of raising a lot of money before they've actually had a track record of performing in a particular way. And ultimately, there's only so many unicorns out there. So there's obviously lots of businesses that have raised money that are performing well. They're not unicorns, but they're doing really well also. But the chances of failure can be quite high if you look at the statistics. A further downside is that ultimately, if you raise investment for equity, that means losing potentially elements of control and independence. So there is something to be said, I think, about building a financially sustainable business, which focuses on sales and profit first. So you build that track record. You, if you're able to, if your business model allows for it, grow without raising funds initially. There are many examples where businesses have successfully done that. So yeah, I think both ways are good, and both have their downsides, and it's really dependent on the situation, the business model, and the business plans of each particular case as to which way is the right one.
Yeah, I agree. I think it's very specific to a business, both in terms of its market, but also its context. I'm working, we've just launched a business at the moment in AI space. And for me, it has to be bootstrapped. It's the only model that will work for it while it finds market position and product market fit. But I'm working on another AI business that is undoubtedly, it has to go for investment. It requires pace, shaping a team fast. I don't see a bootstrapping model working for it. And I think both of which have the potential, similar size, but it's the nature of the market they're in, how they make money, sales cycles for their customers.
Yeah.
What's the technology development roadmap? What's the pace of change? I know that we've got a question around Gen AI and how it might change workflow, and I think I'll come to that in a sec. But I think it's so interesting that it's got to be business specific question for me, and the shape of the market and the opportunity that they're within. And a very successful digital company that bootstrapped as long as it possibly could, and I think that was a great route for it as a business model. Really good. So I know your business model is fractional and FDs. Could you tell me a little bit more about the fractional model and how it's becoming more popular, and how you think it particularly works from a finance perspective?
Yeah, sure. So I set up the FD Consultant because I realized how I was able, well, I'd really had to think about how I was able personally to add value to the growing businesses I've been a full-time director or chief financial officer of. And I think, there was a lot of power in what I was able to do to inform the rest of the board or management team. But I just felt that there are so many businesses out there that could benefit massively from kind of having access to kind of the experience and expertise that I was able to build up. But they don't need a full-time CFO or finance director. They may not be able to afford it. But actually, the fractional route is, fractional or part-time route is ultimately a way to tap into kind of experience and expertise in a way that's really cost effective. It's a shortcut to value add, I believe. So, I think a full-time finance director can cost well over six figures when you consider salary, bonuses, etc. And with fractional support, you can tap into high level skills and experience, and that's really important, particularly for growing businesses, in a way that's affordable and you can control. Yeah. So
I agree. I've experienced working with your team, and that's a shout out to Phil. But for me, it works really nicely, and I think I see it
very
working a
kind of
lot.
you, Mike.
I see it working a lot more in innovation and product development, and my space as well, where it enables organizations to spread their money over longer time periods as well. So what they're able to do is better understand their businesses, and I think it's applicable in a lot smaller, medium-sized businesses, and actually even in the large businesses when they're looking to pivot out or change things. I think these kind of models allow fresh, experienced thinking back into the organization. There's a couple of lovely questions come through, Romesh, so I'm going to pick up a couple. I'm going to go for Pat's first because it's a nice one about AI. So how should CFOs look at efficiency versus new possibility growth spaces as Gen AI transforms more business workflows?
Oh, wow. I'm going to need you to repeat that question again. I couldn't actually take all of that in. Yeah, go on.
So how should CFOs look at efficiencies within business? This is Mike's interpretation now. And as that will evolve in the future, as Gen AI solutions begin to really transform workflows in businesses. So, really beginning to think about how you can automate much of your processes using some of the AI tools that are out there at the moment, and how that can drive efficiencies in business. I think CFOs can look at that as a question. I hope I've done it well there, Pat. In terms
of yeah. Well, it's a good question. It's very relevant. I think it's super important to embrace technology. AI is the buzzword right now, and rightly so. I think it's important to look at what's available, what tools are out there, and try and bring them in where feasible. So that's definitely one of the roles of a CFO, to kind of look at the market, to kind of understand the products and services that are out there that can support and improve processes. Yeah, and I think the challenge is that AI and the offerings that it can help bring forwards is moving at such a pace that it's kind of keeping abreast of all of it. But I think the key to that is remaining open-minded, speaking to lots of people, and being embracing of it. But I think technology is really important, but you need that kind of blend of technology and kind of human experience. That's one of my kind of beliefs, I suppose. To kind of make things work well.
I've seen some good examples in sales and marketing, particularly, but also in product development, in driving efficiencies in businesses where these tools have massive productivity opportunities. I think the challenge is the implementation of that and how that would look. And I think and qualification of that from a finance perspective, if we come back to what it would be as a CFO, I think that would be the challenge. How do you identify the productivity opportunities, recognizing the challenge of implementation, and maybe it will fundamentally change how a business operationally may operate?
Yeah, I think that's a really good point. Before you invest in these kind of solutions, it's worth thinking in a structured way about what the payback is, right? What you expect to gain from these implementations, and I think you want to have a fairly clear idea about that. And particularly if it's a significant investment, implementation can be quite. Of new systems and processes can be quite disruptive, can be quite difficult if not planned and executed properly. But similarly, there are lots of tools out there which can be kind of bolted on to existing kind of systems and processes, which may not necessarily be disruptive, but actually give you quick wins. So it's considering everything, I think, in the round.
Yeah, really good. There's a professional question here going on as well. It's a nice one. So as a professional with a background in accounting and finance, what would you say are the key skills from our experience to provide to enable an individual to transition to entrepreneurship? And what advice would you give those looking to make a similar leap?
Oh, wow. Okay. Some really good questions here. So I suppose I can only lean into my personal experience. And that's, you know, I was a full-time employee director of businesses, you know, up until 2020. So, you know, kind of having that stability, I suppose. And, you know, being a finance person, probably quite risk averse. So to be kind of, to set up your own business, I think you need to understand that you are taking a risk, to embrace it, and to listen to lots of people and get good advice. Understand that a business is not a kind of linear, easy kind of situation. You've got to work hard. There are lots of variables you can't control. But if you have strong principles, I think if you know what your values and your offering is, and you're clear about that, and you can clearly communicate that to your clients, I think you've got a good chance of succeeding. But it is a kind of a road which isn't straight line in terms of, you know, a straight path to success. So you need resilience and to understand what you're getting into. But if you embrace that and go for it, I think it's something I'd highly encourage, and I've certainly enjoyed the journey.
Yeah, it's good. For me, I was thinking there's a quick answer and then there's a really long answer. And I think the really long answer is one where you have to work with the individual on what they're aspiring for and where they're going. The quick answer for me is being open to learning and relearning.
Yeah.
And I think really having that, some people say curiosity, that aptitude for going, okay, I'm doing something new. I only know half of what I probably need to know, and I'm going to learn the rest really fast and recognize that and be open to that learning. I think that would, I'd say, my journey in the last 4 years is a lot of what I've taken on board and what I've thought about. And it's a lot of what I see with other founders and entrepreneurs who are successful on multiple occasions.
That's I hesitate to say this, Mike, but you've hit the nail on the head there.
Yeah, I didn't think you'd ever say anything nice to me today.
You know, so. I know. I didn't want to give you that credit, but you summarised that really well. And you're absolutely right. I mean, being flexible and adaptable is really, really important. I mean, when I first started my business, a friend suggested to me that I, have a website, and I was like, absolutely no chance. In fact, I think I used slightly stronger language than that. I didn't want my face kind of plastered all over the internet. And yet here I am, doing a series of live discussions on LinkedIn. So
what a change, man.
Yeah.
Brilliant. We've got another good question, but what I'm going to do is ask you to sum up, I think, Romesh, if sum up this session, and what would you like the key takeaways for those people on the call to be?
Okay. Well, firstly, thanks to everyone for attending. I've really enjoyed it. Hope people have got some good insights and thoughts from this. But I think that if I could sum it up in one sentence, it's don't fear finance, embrace it, and understand its potential to help you run your business better.
Really good, really good. My takeaway listening to you, and I know we've talked about this over the last few weeks as we've started to think about this session, but for me, the bit I've learned from you is that definitely investing in a robust approach to finance will provide you with the serious capability to kind of grow and thrive. And I think it really is an engine for growth, and I think that gets lost a lot of the time. But I also think, to the counterpoint and balancing equation, is it will also put all the safeguards in place for sustainability so that people don't crash the bus. And in effect, it helps your organization. And I'm going to do the pun you did earlier, strive to thrive. So we get to drop that in at least twice on this call. So what I'm going to do there is pause, I think, based on the time. I think that's been super interesting. I'll give you a chance to anything else in a second, but I just want to say thank you to everyone for listening. I hope you found it really interesting. When Romesh and I discussed Strive and Thrive, we said we want to just open up interesting discussions for ourselves to learn and to share with others. And so over the next months, we've got a number of interesting people to talk to and to share some of their learning. The next one is currently penciled in for the 21st of November, so I hope you can all attend. We will share more on LinkedIn with more details. And if you've got any other questions, feedback, please use LinkedIn to reach out to either Romesh or myself. Romesh, anything you'd like to close with?
Just again, a big thank you to everyone who's attended or is watching this later in a recording, which we also hope to kind of put out. But Mike, it's been fun. I've really enjoyed it, and looking forward to learning more with you over the coming sessions.
Thanks very much. Thanks, everybody.